Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today video we will take a look at the British pound again, because in the gold market nothing is really going on, and we do not need any weekly update on the gold market. So everything that we said previously is still valid, but on the Great British pound situation stands a bit different, and probably we will have some progress on the coming week as a result of the G20 meeting, and maybe some news from results of this meeting will bring some progress on the situation on the cable. In general, as we said many times before, we have the long-term bearish view. To be honest, on the long-term charts, the ultimate target stands below the parity on the British pound and the US dollar. So we expect approximately 95 level below the parity, and but this is very long-term picture. In the shorter term, we also have mostly bearish view, and we have targets around 122 area. So that is the target that's relatively close and it's reachable within the perspective maybe a few weeks. Who knows, maybe it will be even faster. And that is nearest standing target on the Great British pound. So why we think why we have the bearish view, why we think that cable gradually continue dropping within the nearest perspective, we show in our weekly report. So if you're interested with the fundamental background, you could read the report. There are a few factors right now stands behind this. This is the political factor that stands in a tight relation to the Brexit and election of the Prime Minister, election of the leader of the Conservative Party in the United Kingdom. Second is the statistics in the United Kingdom. So we think that it is not as good as it could be, and it shows the first signs of deteriorating housing of the earnings of the United Kingdom, because mostly the major earnings stands in relation to the banking and insurance sector. And once the market starts to preparing to the Brexit, that performance of the sectors will drop and make an impact on all other spheres of the economy. So it's construction, employment, consumption, savings, and so on. And this process already stands underway, although the overall pace of this process stands low. Also, we discussed in the fundamental part of the research the Bank of England view on the economy and what market thinks on the current situation. So, in two words speaking, if you do not want to read, I would say that the second quarter gross domestic product expected to be either near the zero or even below it. So as you know, the first quarter gross domestic product was around 0.5%, while we see and expect that the situation becomes worse in the second quarter. So that's the background, fundamental background of our bearish view on the cable. Still, in the technical from the technical point of view, in the shorter term perspective, we have some signs of the possible retracement on the Great British pound. So despite that, we are watching for these targets around 122. XOP stands 123, but on the weekly chart we also have the COP target and the bottom line on the monthly chart. Both of them stands slightly lower, so around 122 area. And that's the point that we will keep an eye on. So from that standpoint, we are searching chance to go short. And if you take a look at the ABCD pattern that we have on the daily, you could see this real acceleration down on the CD leg, so that market even hits the OP, shows minor reaction, and by the momentum has dropped even lower. So when you see these kind of the ABCDs, it means that the reaching of the XOP is just a question of time. So in such ABCD patterns, if even market will show some respect to the OP, this will be just a retracement. and later market will proceed to the XOP. So our task here is to get the suitable point where we could consider chance to go short. And in the current circumstances, you could see that market is forming some kind of the head and shoulders pattern. So actually, we talked about it already in the previous reports on last week, and we intend to use this pattern, but we could use it in two ways. First way to use it, if it indeed will work, and we will get a kind of the A, B, C bottom somewhere around 126 to the upside, so it should be somewhere around 28.50, 29 area. We will get a kind of the ABC retracement, garters cheaper to sell or something of that sort. In this case, we will take the short position in this area. But second way to use it in a way of the failure of this pattern. So, for example, if market starts to form right arm of this pattern around 126, but will fail, and that will be clear signals that it's time to go short, because downward action should accelerate in this case, and market will drop below the lows. That's our trading plan. Whether you would like to trade it long, well, this choice substance up to you, because it's very personal and depends on your time frame where you trade. If you trade on a daily intraday charts, well, that's possible. Why not? If you trade on a weekly daily, in this case, you do not have any bullish context, and you just need to wait and see when retracement will be over or when the hand short pattern will fail. So now let's consider this pattern itself. On the 4-hour time frame chart, here is our major scenario for coming week. We have the hand and shoulders, and market hasn't quite reached yet the bottom of the right arm. Theoretically, this should happen somewhere around 126 area, because it stands very close and keeps the harmony of this hand and shoulders pattern. So this level stands very close to the bottom of the left arm. And take a look. If market will form the ABCD pattern, that creates an agreement precisely with the 126.11 area. So OP target stands right here. Potentially we will get Gartler's triple to buy as soon as market will complete the ABCD pattern. And that will be clear setup for those of you who would like to trade it long. So that's the point that you should keep an eye on when the market will appear at this point, and consider it if you would like to go long. That will be the point that you should keep an eye on. So simultaneously, that is our actually signal area, because if something will go different, and market will show either the strong collapse here, and will be acceleration down with the just 1-2 candles that will hit this 618 support, or we will see that market breaks it down and coming back to the bottom of the head. That will be our signal for taking the short position with the target around XOP. So as you can see, this level has two special meanings for us. Not just the point as a point where you could consider a chance to go long, but also as a signal line that could tell you that bullish scenario is failing and it's time to go short if market will start breaking it down. So that's what we will keep an eye on the next week. On the hourly chart, we consider the same hand and shoulders pattern that we're talking about in the previous week. Now market finally has hit the 618 resistance, although this pattern looks not very attractive. So whether you would like to trade it short with the OP target, this is not the primary question for us, because we do not trade on the hourly chart. We just take a look at it just for understanding how market could reach this area. Maybe if it will be useful for you, you could also take a look at this pattern, but actually, guys, it looks not very attractive. So you can see it's a bit extended, neckline is sloping, and right part of the pattern is a bit longer than this one. This is not good sign for retrading. So it means that market could form some different way of the retracement down. Maybe some different patterns will be formed or something could happen. From that standpoint, we do not see really this setup as attractive for trading. But of course we can't forbid you. So that being said, our major context is bearish, and we're watching for entry point to go short. This will happen either on the completion of this hand and shoulders around 29 area or on the fail around 126. That's our major scenario. In a parallel action, you could think about trading this head and shoulders pattern, taking long position and forming this A, B, C, bottom, D pattern. So that's this additional setup that we have here.